All right, this video contains trading for December 23rd and December 24th, right around Christmas time. This first part is December 23rd. Let's take a look at that. Okay, taking trades that I know are not my best setup. What is my best setup? Well, if I'm bullish, I want price to be above all the moving averages on the day chart, like all these days up here. Now that prices fallen below the 8, below the 20, it's stuck below the 20. And you got these last 2 days pen tails that have failed and started pushing back down. Price started going up, but it never went above previous day's level and held, tested, and kept going. So I wanted to take the long anyway. And I was only looking at a few charts, not all my charts. So I saw the 10,000 tick chart. I said, you know what? Price is above all the moving averages right here, right? And it already swept the pivot. So I went long and I put my stop right here, and that's where I got stopped out. Only $100. I didn't do the full 250. I like nothing more than 250. 250 is the most, but I had an opportunity to do, a trade. There's a $108 loss on that, and I'm happy. I don't have to lose a full amount. I just wanted, if the trade idea is in there, then go for it. Let's see, the 5,000 tick chart price was about right here. And I thought it was going to keep going. But again, on the day chart really is very, very helpful. Let's take a look at the hourly chart. Yeah, price had broken this trend line, right? Price is above the trend line over here. And I know I can do it. Price is above the trend line. It's just whipping and chopping below the lows. It didn't go below this one. I guess if I had my $250 limit, I'd still be in this trade. And sometimes that's better, just to spread it out, take your loss, take your full loss. So I want this video to be about taking a trade when the day chart is not bullish like I really want it to. I really want the day chart to tell me, to go short or go long. If it's in the middle, I'm not saying I won't trade. I'm just saying it's less of a preferable trade. And at least want the hour chart, the 10,000 tick chart, and the 15-minute chart technically is not very bullish at all. I mean, I bought it, on this spike up here. It didn't even close above the trend line or above these pivots. And you got the crossover of the moving averages pointing down. All the moving averages are basically under each other except for the 200. They've all crossed right here. And it's just choppy. It went below this pivot. It went above this pivot. It went below this pivot. So it's kind of like a megaphone now, megaphone. So I turned off the computer for 15 minutes, which was very, very helpful to clear my head. It's something I've been doing. I think it's a very powerful technique. Get away from the computer, go do something. Came back to the computer. Now I realize what I did wrong. And I'm not taking any trades. I might not take any trades today, which is kind of where I've been going with my professional trading psychology. Is just, I don't have to take a trade. Never thought that way before. And it's one of the most powerful skills to have, is to be able to turn off your trading. And I'm learning that now. Turn off the trading. I could go short. I could think about a short. But when it comes to shorting, I want everything to line up the same way. And you got these previous days, like the last trading day was such a whipsaw, strong sell-off, bounced back up, strong bull market, came right back down to this kind of like middle closing inside bar day. We're in the inside bar of that previous day. Inside bar, anything can happen. You could be right on a long, you could be right on a short. Both people might be right. There's probably ways of trading it. Develop your skills. Range trading is a good thing if you know what you're doing. But just trying to go over my thinking and where I went wrong today on that first trade. I'm interested to know if I would have kept my $250 limit, if it would have worked out, or if it would have just been a bigger loss. Because quite simply, if I'm going long, the day chart's telling me be careful already. All right, there's the previous day, and it's right in the middle, hasn't closed above the top. And what I like about it, it's still bullish in a sense, because the moving averages haven't even crossed over one another. The 8 is still above the 20 is still above the 50, and everything's above the 200. They haven't crossed yet. And so, that's kind of why I was thinking bullish, at least a little bit today. But I'm going to wait and see what happens. But otherwise, it's very important to think it through, the failures as well as the successes, and see what did I do wrong. Am I glad? You know what? I'm sure if it breaks this pivot right here, that's going to be the $250 limit. So if it breaks that pivot, all it would have done was take more of the money. So I'm glad I got out when I did. All right, it would have hit my stop loss for more. I just wanted to put that in the video as well. Right there, boom, 250. I got stopped out way up here at the top. So I'm pretty happy with that. I am challenged, however, to do some other kinds of trading strategies. I like to be able to trade ranges and get a very small risk on trades. Smaller the risk, the better when the day's not all lining up. When I have a trade opportunity and it's not perfect, I will still take a trade or two as long as I can find a setup that gives me a very small risk to reward, like a 1 to 5, a 1 to 10, a very, very small risk limit. And I'll take those trades. Like this right here, for instance, is very, very interesting right here to take this trade right here. Like, for instance, once it sweeps this level, and it did, we're looking for it to go back up. But I probably would have been out there. I would have been out. I'm done. Just looking at a opportunity to sweep the lows, like over here. Like what I'm saying is that this over here, when it sweeps the low, a lot of times it'll sweep the low and come right back up. I like those kinds of trades because the risk is so small compared to the reward of it bouncing, if it were to bounce. All right, this is the trading Christmas Eve. Sketchy market. Look at the opening 15-minute candle. First it sweeps the bottom down here, and then it sweeps the top. It just, look at that, just choppy. But I like it because this is the previous day's levels. See, this is the previous day's levels. It consolidated and pushed up over the top of previous day. And then now this is a couple of days ago where it is pushing up over the top of that. It came down and tested. I bought it. And then it came down and stopped me out right here on this candle. Closed again. I got long again. So, but here's cool. What's cool about it is my stop loss was definitely in place. Like right here. Here's the line. Here's the green candle. That green candle right there. I jumped in. It came down below the low of this level and stopped me out. Now, if it does it again, I'm not going to trade anymore today. It went back up on a green candle. Very strong green candle. Right here, and I got long, and my stop is under this pivot now. So if it comes down and gets that pivot again, it is, and because my trading strategy is all around this previous day's high or previous day's high levels, then it tested it, it went up. If it doesn't work on a second time, I'm not gonna trade anymore. I only lost $50, even though my maximum loss is $250. I wonder what would have happened if I would have kept it at $250, because if I would have kept it at $250, let's see up here at the top, I would probably still be in that first trade. Yeah, $250 here puts me under this pivot way down here, instead of working with these lines up here, right? So I'm keeping my stop loss less because of these lines. If it stays above these lines, which is the previous day's levels, I don't want to have to see it come all the way down here and stop me up for $250. So I took a $50 hit. It went back up. If it fails, that'll be another $50 hit. And then I'll just take a $100 loss with 2 tries instead of, risking $250. We'll see what happens. This is Christmas Eve trading. Very half a day, volume's low. A lot of people aren't even trading this week. So it's riskier than normal. Okay. Christmas Eve trading. I'm going to put my stop on break even right here, actually under this pivot right here, and see if I'm going to lock something in. But technically, if it keeps moving, I should just go candle by candle and be glad and lock in what I can lock in. So that's what I'm going to do. If it keeps going, I'll just trail it candle by candle. Otherwise, I'm going to get out of this trade for
order filled.
I'm going to take profits right. Made back on my money, and now we're green for the day. I just don't trust the day. So we made back the money for the first loss and more, so we're profitable. It's Christmas Eve, half day, low volume day. If you can end a day on this today green, you're doing good. I'll watch it, but other than that, that's going to be all the trading I do today. I don't want to risk losing profits. So if something sets up, I might take it, but we'll see. Just a quick addition to Christmas Eve. Look at this, almost 3-to-1 return on the second trade. That would have been beautiful. I didn't quite get 2-to-1. I got 1.5. 1.5. I could have doubled that. So something's got to be done with me holding my winners longer.